So good morning, everyone. My name is Jeremy Quaino. I'm the general manager at Jumo. So I manage our operations across the now eight different markets that we're in. We recently went live in South Africa. I'm also responsible for managing our country management team and our bank partnerships team. So over the next 10 minutes, I'll try to paint a picture of who Jumo is, what we do, and why I believe that we are deserving of this AFI finalist selection. Okay, so very simply, Jumo is a fintech platform that partners with large banks and mobile network operators to solve the issue of unequal access to financial services in the emerging markets. I'm sure it's one that we are all familiar with. Now, the way we do this is by leveraging our advanced data analytics and machine learning algorithms to gauge a customer's propensity to take and repay a loan or simply access a financial service. So what we've been able to do for our partners is we've opened up a base of customers who were previously completely invisible to them because these customers were either seen as risky or expensive to serve, and particularly because they had no prior financial transacting history. So again, the problem we're trying to solve is providing access to the 360 million unbanked people in Africa. Our goal at Jumo is to leverage our AI and technology capabilities to ensure that no one on the continent is denied access to basic financial services like savings and credit. Our founder believes quite strongly that access to financial services is a fundamental human right, which is what led to the creation of Jumo. And at Jumo, our mission is not only to grant access to financial services, but to also empower the consumers that we serve, raise their standard of living to the point where they can eventually transition into a formal financial system and access traditional financial services equally with everyone. Now, one of the best ways to illustrate how Jumo has done this successfully is to zone into one of our biggest markets, Ghana. Now, Ghana, which also happens to be my home country and where I'm based. So for context, before 2017 in Ghana, if you didn't have a bank account, that means you couldn't access formal credit. Now, the key word here is formal because most people would still either have to borrow from family and friends, and the most popular lenders were shopkeepers who would allow people to take goods on credit. Now, in 2017, Jumo was the first to pioneer mobile-based digital lending in Ghana, and since then we've served, as you see on the screen, 6.5 million customers, granted 81 million loans, and disbursed and collected over 30 billion Ghana cedis, which is the equivalent of $2.3 billion since we started. And we do this by partnering with the tier one telcos like MTN and tier one financial institutions like Absa, Ecobank, and Let's Share Go on the ground. Now, a good example of a beneficiary of this or how it works in practice is this lady that you can see on the screen who I know personally called Adubia. Now, Adubia is a vendor who sells water in traffic on a headband, right? Her usual routine would typically to borrow about 30 Ghana cedis, which is less than $3, either from a friend or a neighbor in the morning, use that to buy the water that she sells in traffic. And she would hope to make back the principal with some interest at the end of the day so she could repay her friend and keep some margin for herself. Now, on the days that she's unable to make back the money, she would have to deliberately avoid meeting that friend or hide till such a time as she was able to make enough money to pay them back. And she's forced to do this because she had no other borrowing choices. What she did have, however, was a mobile phone which she used to transact on mobile money. So Jumo's platform and product allows her to now access credit right from her feature phone, so she doesn't have to borrow money from anyone and hide. It's a 30-day product, so if she doesn't make a return, she has a longer, more flexible timeline. And the way that our product works is that we try to educate customers along the customer journey and shape their behavior. So a customer knows that I can access a higher amount with better rates if I repay my loan on time and abide by the terms and conditions. We bake in grace periods and penalty waivers for particularly difficult times arising, such as during COVID, and we just try to lean into the needs of customers as much as possible. So for someone like Adobia, the loan now becomes more or less working capital for her business, and she's been able to transition out of selling water and traffic to having a small store where she now employs others to do hairdressing, which was actually her true passion. So it's helping people like this that has led us to, and you see the small icon on the screen, led us to be, we won the FinTech or Financial Inclusion Firm of the Year in Ghana in 2023. So far, since we launched in 2015 on the continent, we've been able to serve about 23 million people across the seven, now eight countries in Africa. We granted 181 individual loans to customers. And in 2023, our average daily disbursement was close to $3 million, so accurately 2.9 million. And from an eligibility standpoint, we're able to onboard 4.6 new customers every single minute. Now, this slide is an extension of that, which just illustrates the velocity of the demand we're able to meet, right? It essentially highlights how in 2023, we were disbursing up to 56 loans to consumers every minute. So we're just 4 loans shy of, disbursing a loan per second. And I personally think that we'll be able to hit that milestone this year. So the impact that we're able to have is displayed on the screen here. It's one that we at Jumo are quite proud of. So according to our annual customer surveys, 83% of our customers are satisfied with the products on our platform, and that has led 94% of them to return to take another loan after repaying. 79% of them have said access to services on our platform has improved their lives, and about 60% of our customers that we serve are MSMEs. 32% of our loans are granted to people who live in non-urban and peri-urban areas. And we've seen this segment of customers steadily grow on the platform. And this survey shows that 80% of them are now able to plan financially because of the utility they derive from the product. Now, what I think we've been able to do well is basically leverage our data and AI capabilities. Now, in Africa, for example, despite the proliferation of smartphones and apps, most people still transact primarily using mobile money on feature phones that use the very old and basic USSD channel. Now, rather than seeing that as a hindrance, we've been able to tailor our services to leverage that channel where the customers are already familiar and meet them where they are. So we found this to be more valuable for customers than app lenders because it requires no data, it works offline on any type of phone, and the consumers are already familiar with it, so nobody actually has to stand by them and walk them through the process. And all this has been made possible by our real-time lending platform backed by our AI engine. So our AI prediction engine includes over 15,000 predictive features and hundreds of AI decision models, which can be transferred into various ecosystems. So we learn from each of the other territories that we're in every time we're going in. The result of this is more accurate credit scoring, a closer product fit for customer satisfaction, and tighter risk management for our capital providers, because obviously you want to make sure that the banks are satisfied with the return on their capital so that they keep upsizing. And our products are designed in such a way that they're meant to be gender and age agnostic to reduce bias and deepen financial inclusion, especially for women. So a third of our customers are women and over 20% of them are female-led MSMEs. So our data tells us that almost 59% of the medium to risk customers that we onboard are transformed to lower risk customers as they progress through Jumo's products. And this means that they can improve their financial profile and access better choices at better prices. And the more data we get on these customers, the better our model prediction accuracy. And that translates into us being able to risk-raise customers more efficiently and ultimately reduce the price to serve these customers, which we've consistently been able to do since we started in 2015. So to conclude, the issue that we face is not one of demand, but it's actually one of supply. Despite all we've done across our markets, we are barely scratching the surface. I mean, I'm sure you know that the MSME funding gap still stands around 1.35 trillion annually. And we've been able to build a technology infrastructure that bridges the gap of access in a more customer-focused way. However, what is still lacking or is in short supply is the capital to serve the needs of these consumers. The more financial service providers we partner, be it banks, impact lenders, impact investors, the closer we come to reaching these people that are beyond the last mile. And I have no doubt that this forum will be a huge catalyst to attracting the right audience, the right partners, and the right type of funding that we need to continue driving eligibility in our market. So I'll pause here and thank you for the opportunity.
Thanks a lot, Jeremy, for your presentation. And I'll pass to our judges for questions. So any of our judges who'd like to go first, Arlindo or Sarah or Carmen? Sarah, I can see you're ready with the questions, so go ahead.
Thank you so much. How do you, so you're just into 8 markets now. I'm sure there's many more that you're aiming to be in, Jeremy. What sort of the challenges and in terms of moving and operating in other countries that you guys have to factor in before you can get going?
Sure. I think the biggest one typically is regulation. So each market is different. As you know, Africa is quite fragmented in that sense. So being able to go into a market where the regulation is, favorable to having, a lender come in and try and deliver these services. Typically, you are not allowed to lend on your own. So that is why you partner with the bank and leverage their lending license. So the bank becomes the lender of record. The telco becomes the provider of data, and Jumo comes in as the technology platform that bridges this gap. So regulation is always a significant factor. Also, the penetration or the financial inclusion gap, for example. In certain instances, because of our product, people start to use mobile financial services more. But in other markets, it's already quite deeply and ingrained in the daily lifestyle. So it's easy to come into, let's say, a Cote d'Ivoire or a Benin, as opposed to going into a South Africa where there's a deep card penetration. So you look at all of those factors, and I mean there's a lot more, but those are some of the top ones that we look at before we go into a market.
Perfect. Thank you so much.
Yes, may I come in?
Yes, please, Alindo.
Yes, Jeremy. In Ghana, where you are you competing with banks, or you are partnering with them also? I saw that
No, so we
Absa, and Action.
No, so we don't compete with them. We actually collaborate with them. So we work with the banks, right? If you look at the kind of demand that we've spoken about, it's not possible for us to fund that off our balance sheets alone. And we've been able to prove the model successfully. So the banks now fund some of these loans. So the money that comes for these products, particularly in Ghana, is all funded by the banks. So EcoBank, Absa, Letshego, Fidelity, all contribute their balance sheet to funding these products. And we handle the scoring, the disbursements, the collections on their behalf, and also take that load off of their core banking that was not built for this kind of low value but high volume transactions. So that's why I said that we've been able to open up this customer segment that on their own they wouldn't have touched, but with Jumo coming in, partnering with the telco, now they have the confidence to go into these markets. So we partner with them, share revenue, build the infrastructure, and enable them as much as possible. So it's collaboration, not competition.
So you're acting as a broker for the banks?
You could say that. We think of ourselves more of a partner for the banks as opposed to a broker.
Yeah.
Thanks, Alindo. And I can see we have a question from the audience, from Andrew. So Andrew, if you'd like to unmute yourself and ask your question.
Thank you very much. Thank you, Jeremy, for the highlights. My question is, first, I agree with you that it's not really a demand question, it's a supply issue. And that's where my question comes from. How are you ensuring that you're not inadvertently dragged into predatory lending? Because one of the challenges we've seen around digital credit is really predatory lending, taking advantage of the excessive demand and shortage of supply. So how are you positioning yourselves not to be party to that? Thank you.
Thanks. I think that it's one of the biggest priorities for us when we started running this product, right? We've seen these effects happen in other markets. We've seen this happen in Kenya. Fortunately for us, the markets that we've targeted, for example, Ghana, has a regulator or regulations that require you to be able to prove that this is not what you're going to do before you are even given a license to operate. So for us at Jumo, what we are required to make sure that there's full transparency and the customer has to consent before they take a loan and know exactly how much they are taking. We are required to display how we calculate a customer's affordability. Some of the business rules that are set by ourselves and the bank partners require a customer at any point in time to only be able to access only one loan that falls within their affordability and the bank's risk appetite. So there's a lot of controls that come in that prevent us from sort of just granting loans at random so that we meet the demand. There's a number of factors that come in from a regulatory standpoint, from a business bank partnership standpoint, and from the telco standpoint, right? The more predatory lending you do, the more churn you cause on the telco's platform, the more people tend to take loans, throw away their SIM cards, and the telco will not allow you to do that. So we're required to show that we have the business rules that prevent us from doing this. We're allowed to show full transparency in the customer journey to the customer, and we're supposed to capture and imbibe the bank's risk appetite, tolerance level, and display how we calculate affordability for each of these consumers. And that all comes together to help us prevent those instances of predatory lending.